Hello and welcome to Morningstar. I'm Emma Wall, and here today to give his 3 stock picks is Simon Brazier, manager of the Investec UK Alpha Fund. Hi Simon.
Hi Emma.
So what's the first stock you'd like to highlight today?
BT, a UK telecoms company that actually in 2016 performed quite weakly. Not, I don't think, because of the internal performance of the company, more some of the external pressures. The government talking about them breaking this up, Openreach moving out, pressures relating to their pension fund potentially, etc. Having said that, I think actually today this is a good quality company that has lots of opportunity to generate cash. The cost-cutting story we've seen for nearly 10 years continues, and in a world of convergence, it's now got EE on the mobile side performing very well. It's got good fixed line exposure, BT Fibre, which it is rolling out right across the UK, and not only on top of that, it trades on 12.5 times earnings with nearly a 4% dividend yield. A good quality company that's going to grow its profits, grow its revenues, grow its cash flow this year. A good solid base in my portfolio.
And what's the second stock today?
Maybe one a bit more controversial would be ITV. It's a UK media company. It actually has 2 main drivers. It's exposed to UK advertising. You see the adverts in between their television programmes, but actually it produces a lot of content, which it obviously transmits on its own channels, but actually sells around the world, the likes of Downton Abbey, X Factors being some of the most famous ones. This is again a company that has performed badly last year because people are concerned about the outlook for the UK economy, but I think a lot of that is now in the price. The stock trades relatively cheaply on low double-digit earnings multiples. But actually, to me, the sort of left field thing could be this is one of the last independent content producers left that could be readily available to anyone to buy. Liberty International own a stake in it, and to me, I believe in a world of convergence. We've just talked about BT. I can't see over the longer term how this remains independent.
So a candidate for an M&A?
Definitely.
And what's the third and final stock?
The third one maybe seems to be slightly boring, but it's Reckitt Benckiser. I mean, in a low-growth world that we're in today, finding companies that can grow their top line, their revenue organically, at more than 5% is virtually impossible. And this is a company that does it. So to those who don't know Reckitt Benckiser, it's a global consumer staples business. And it's actually positioned in some really interesting niches, particularly, for example, in consumer healthcare, where it is growing strongly both in the developed world, but also in the developing world. Doesn't look particularly expensive, has an 8% free cash flow yield, virtually has no debt, so lots of opportunities to use its balance sheet, and it will grow. And again, as I said, in this type of world, it's a stock that again makes up a decent percentage of the portfolio.
Simon, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.